Hey, what's up, dividend investors? I'm Russ, and I've been dividend investing since 2018, and I'm sharing my journey and my passion here with you each and every week on the wide, wonderful world of YouTube. So we're going to see that July was not a very big month for dividends. July, April, January, and October are kind of the smaller months for dividend income, but I really made nicely with options income, as you're going to see in a minute. And I've been getting more comfortable with selling these weekly options. And shout out to my friend Jeremy from DividendStockpile.com, who I've had on several times. Really awesome thing, bringing in that extra income by selling covered calls and cash secured puts. But we do see in the month of July that I received $190.63 in dividend income on top of $1.29 of interest, because I have some cash that's just been sitting in the account while I'm selling cash secured put at times. So I haven't really been going hog wild buying a lot of stuff in the month of July. And as you'll see in next month's portfolio update, I've really begun consolidating a lot of positions because I'm really, again, liking this selling options, my cash secured puts, and the covered calls, making certain stocks part of a wheel. So we'll get more into that in the upcoming portfolio update video next month. But I bought a share of Target at $139.99, added $4.32 of Patty. Target's really kind of run up there, and I would love it if they came back down to the low 140s. So we'll see on that. I'm kind of waiting that one out. Bought another share of 3M at $127.90, added $5.96 of dividend income. Now with 3M, it's going to be a little bit interesting. It's going to be touch and go. Their dividends have only been increasing by a penny as of late because they have two litigation cases that they're dealing with the PFAS and with the chemicals, the forever chemicals, and with the military earplug issue. So I think they're kind of trying to save a lot of money for that. Bought 2 shares of Verizon at $46.90. That in total added $5.12 of Patty. Advance Auto Parts, still building that position, but a little bit of teaser. It's not long for the portfolio, and I'll explain why in the next video. But Advance Auto Parts, I bought 1 share at $190.75, which that added $6 of Patty. Bought 2 shares of Leggett & Platt, ticker LEG, Leg, at $39.70, which gave $3.52 of projected annual dividend income to the portfolio. I always say Leggett & Platt is one of the most boring and unsexy companies because they make, manufacture, distribute couch cushions, bed frames, mattresses. In the self-directed IRA, just one purchase was Sprott Uranium Miners ETF. That's just a basket of companies that deal with uranium, because I think, and as being somebody who was in the US Navy on an aircraft carrier and lived on top of microreactors, I think microreactors are the clean green energy of the future. Uranium is the way to go. The clean energy that's going to save us is here, and I think it is nuclear, so this is a long-term hold. And in the Roth, because it was so dang dong cheap, I bought 1 share of IIPR, Innovative Industrial Properties. They are the landlord for the cannabis manufacturers, the growers of cannabis. That dropped all the way down to $89, and I had to nibble, which gave $7 of projected annual dividend income. And by the way, they are a REIT, and I do like to hold REITs inside of the tax advantaged accounts because they are pass-through entities. They don't pay taxes on their income. You do. And that added $36.74 of dividend income to the portfolio. Moving on to DapperDividends.com, where you can check out all the options income. I kind of got a rolling tally going. So if we scroll down, we will see that I've actually been really busy. It's really been picking up as we get later on in the year. And starting here with July, I sold a NEO cash secured put. We won't get into explaining these, but I got $39 for that. Charles Schwab takes 65 cents per contract, so that's always why we're going to be low 65 cents here. So 38.35 from that. Sold a Starbucks covered call for $12.35. Fun fact, this was on the same day it expired, so basically I got paid $12.35 for just waiting a few hours. Another NEO 50.35. I sold a PepsiCo 177.50 call that made $13. See, these, they add up. They're not a lot. A Starbucks covered call for $19.35. And then right back at it, sold a Starbucks covered call, but this one did get assigned, as you see right here. It was expired and the shares were called away. So I received $8,200 cash. And by the way, Starbucks, if we go back to April 20th, I got in here I sold a put for $62. So that got assigned. The shares were assigned. And then that same week, NEO, I had a put on NEO, which was the opposite, meaning I don't own the shares, but I had the $19.50 per share, so $1,950, because that's times 100 shares was in the account. I got paid $39.35 after Schwab's fee for that. And then right back at it, because I don't have the Starbucks shares, I'm still trying to get them back. I was trying to get in for the dividend that's forthcoming. I sold a put for $114.35 that expired worthless. And then I sold a PepsiCo covered call for $175, which that expired worthless. And to wrap the month up, I sold an Intel $42 covered call that I received $44 for. And all in all, $603.13 of options income just in the month of July. And if we pop on into the portfolio, we'll see that my annual income is fluctuating just a little bit because I had those Starbucks shares called away, but I'm still making nice income from those Starbucks shares. I've actually made $609.80 since I first sold that cash secured put on Starbucks on April 20th, which by the way is my birthday, which was 105 days ago. That's about a 7.62% return. The top 5 portfolio positions by percentage is of course PepsiCo at number 1. I got those 100 shares. Johnson & Johnson, J&J is 45 shares across 3 portfolios. That's 6%. And I want to point out real quick, look at the yield on cost, what holding shares does. Because look at that PepsiCo yield on cost, 3.06%. That's the yield I'm getting. And if you buy right now today, you have a yield of 2.60%. Same thing with J&J. Now, T is a different story. That one's been a little bit of a mess. This one's been a little bit of a bitter pill, but you love them or you hate them, and I'm holding firm to AT&T. And in the number 4 position, Kimberly-Clark with 4.4% of the portfolio, and rounding it up is AbbVie, ticker ABBV, which I haven't bought them in forever. And speaking of yield on cost, look at that 6.29% yield on cost, and their starting yield right now is 3.99%. So look at that for buy and hold, what the power of compounding and being invested in companies that consistently raise their dividends do. And because nobody's perfect, I want to show you the ones that I'm down on, the stocks that I have deep in the red on. First up is ONL, ticker ONL, which is Orion Office REIT. And this is the spinoff that Realty Income shat out. They are office property, terrible, should have sold them, down 47%. Warner Brothers Discovery, not a dividend company, should have sold them too. IIPR, down 40% on, have 11 shares. AT&T, there it is, we're down 24% on AT&T, 376 shares of good old T, but we're still getting those dividends. And Intel, we're down 23% on, and that is one of the companies I'm using as a wheel stock. And if you haven't done so already, I hope that you're going to clickety-clack that thumbs up button. And if you're not doing anything, you know, I just did a very fun video showing quick and dirty the best dividend stocks on sale that you should be buying in the month of August, or at least consider buying them. You click this little itty-bitty teeny tiny box right next to my head, and if you click this box right here, I will talk to you there.